Well, here we are at the ICC Academy and we're discussing trade operations and the impact of the current challenges in the trade environment. If you look at trade, well, it's down, but it's definitely not out. And if you think about it, from 2018 until now, trade has actually grown globally by 25%, okay? Hard to believe, but it's grown by 25%. Last year, global trade grew by close to 3%. Again, that's staggering if we look back to the early 2000s when it was growing at 7, 8, 9% and double the rate of GDP, taking loads of people out of poverty. So trade is chatting, but it's not down and it's not out. And it's interesting, services grew last year by about 9% per annum. So that's another opportunity in terms of trade finance that I think may not be answered. But here I am with Kevin with R&B and Shiyam from SMBC and Srividya from Traydstream. And we're here to talk about trade, but in terms of trade operations and not really the broader macro system are the other challenges. So maybe we'll kick off. Maybe, Cam, we could open up with looking at the challenges in terms of trade operations and a specific question, okay? In the backdrop of the geopolitical challenges and the tariffs, but that's in the backdrop. But in your day-to-day work, in your volumes, are you seeing volumes decrease in terms of trade products being processed from an operational point of view?
So I think in terms of the volumes, it hasn't never dropped in trade. Trade is a core product for banking, so it continues to move. We haven't seen a significant drop, but we do see that customers do come for us for structured solutions and specific advisory services. Also, that has grown in the recent past.
So levels are still the same, but this could be a long train coming, so it probably is around the corner. But Kevin, in terms, what's your experience in this context?
Very, very similar. So volumes pretty much flat. What I do see is a transition into more local supply chain finance opportunities. So we're seeing, in the continent, there's still obviously risk mitigants and traditional product sets still are valid and got a place. But we are seeing a transition to local supply chain finance opportunities where local corporates, local business community are starting to trade within their own continent.
I think we'd say local and regional. I think we could say that for all of it. But getting back to the point you made about volumes flat, okay, but customer more engagement. I just didn't pick up on exactly what you meant by that. What do you mean more customer engagement?
So the customers these days actually require more bespoke operations. So in terms of their competitive environment,
okay,
as well as their overall businesses, that is quite dynamic. Therefore, customers require us to actually provide bespoke solutions. That is also compounded by certain technology advancements.
Yeah, but that must mean that you need to do more for the same customer base. So surely if you're doing more, that has an impact then on your processing, your technology, your resources. So maybe, while this is good news to a degree, there must be pain points coming out of this, okay? So putting you on the spot, I'm going to put you in the same question, Kevin, in a moment. What are the pain points? Yeah, that's a good point. But one or two pain points. So, Shiyam, one or two pain points.
I think I'd like to link it back to the bespoke solutions.
Okay.
For bespoke solutions, we require to provide a lot of manual handling.
Okay.
So the systems are kind of not moving at the pace which the customers require us to actually solution.
Okay.
So we need to inject more people and more people with expertise. That means that we need to have a lot more trade finance specialists in the market. Unfortunately, we do have that gap.
Yeah, that gap is growing and it's actually accelerating, okay? So back to pain points, Kevin. One or two, maximum, okay?
Very similar to that jump out. One is technology. So the technology is there to create the efficiencies for a growing complex client profile. So the clients are getting more and more educated, more knowledgeable about what technologies are out there. Where we often fall short as a banking community is when a technology enters a big organization.
Okay.
The manual intervention requirements kind of stumble around creating that end-to-end efficiency. So I think that's kind of one point that I think we acknowledge it and you're working on how we can streamline that back-end process. Similarly, to my colleague, skill set. So if you look at content, you look at broadly speaking, all people like me are kind of phasing out. We're going to pass.
So I should be gone already.
Well, you're now. Yeah, and what we're not seeing is that youth coming through with the ground knowledge of how to issue instruments, how to talk to clients about that. So I think there's a gap there, and we acknowledge it, and we are kind of remediating how we get the community up that value chain. But gotta keep working at it.
I'd like to add on to that point on technology. So data standards had been a bigger issue for the banks in APAC. So we see a lot of time and resource investment into standardizing the data set. Okay, so in order to achieve a level of efficiency, before we get there, the data has to be standardized. So this is one of the biggest challenges banks face in APAC.
What kind of data are you talking about in terms of trade operations? What data are you talking about?
So there is a rich level of data in documents, trade documents.
Okay.
And we hardly use that level of data in the banking system. So there are systems or technology currently available for us to extract that level of data. Okay, so that's the effort for us to put into we bring in that data.
I can add one more point to it. I think it's an extension of the data extraction. One is your traditional data extraction. This is what the flows look like. These are their corridors. But I think if we take it one step further than that, you can use that data to say, if you've got a financing, if there's a financial loan coming from another bank, you could use that data to be able to explore other opportunities for financing.
Okay.
Equally importantly is how do you link your global markets and paternity to trade finance? So traditionally in most banks, you've got the trade finance practitioners issuing LCs, etc., and global markets doing the FX separate.
Working in silos.
Very much on the silo intelligence. So I keep to kind of link that using the data extract.
That's really interesting, and I haven't thought about that perspective because, again, being around a long time, we think about trade finance being transactional. Each is a little package. But behind all of that, there's all of this data over a long period of time. And if we can map that data and see the sequence of events, we can obviously make more intelligent decisions.
Absolutely.
Would you agree with that?
And then that's exactly, where technology really, the play of technology comes in. So you use the same data points that are captured from the documents, for example.
Okay.
And ICC and documents go synonymous as far as document scrutiny is concerned, but there are certain fields that are there in the documents which are relevant from a global markets perspective, especially in complex markets like in Africa where there is a challenge around FX, or in APAC in certain economies, Vietnam, Indonesia, you do have volatility in currency.
So this should facilitate better risk management and better decision making.
And equally importantly is the client experience. So you could proactively
reach out
solutions to clients before they potentially thought about it. So it's using a data just a lot more kind of client friendly.
Proactive.
Respond.
Well, that makes a lot of sense to me. But Shiyam, put you on the spot. Can you maybe pick one example out where the technology and the data is helping you in your business today, not tomorrow, today?
So from APAC's perspective, I have seen very positives related to document examination, document scrutiny related to trade finance. So this has been a very long, enduring process. When I joined the banking industry 20 years back, this used to be a very specialized, human-driven activity.
Our gurus.
Now we have managed to kind of break that code in the industry to get a particular rule set enabled. And with that, we are turning around the document scrutiny from days to hours. We do have removed some of the layers. The operating model is much more smoother. So that's one of the positive examples I can give from the APAC market.
I really like that, and we talked about this before, Srividya, that using your technology, it's not about that the technology means we don't need any dot checkers. It means it's just bringing efficiently, streamlining
the man and the machine together.
Exactly, to bring an optimum.
And this is one of the concerns which we've observed in banking, and of course, both from the two different markets that we work in. The concern is the man going to be eliminated from this whole journey? I mean, no one, as trade finance is so complex, it's impossible to remove the human element from the equation. However, you can assist the human to do much more in the same time. And that's what technology enabled.
Okay, so if we're assisting the human, I think we are now beginning to drift into the subject of artificial intelligence, okay?
Exactly.
And I, for one, maybe 3 years ago, AI, I was interested in it. I thought it would bring some value, generally, like a super duper encyclopedia you can walk around with, or, whatever. But I really didn't then see any major efficiency in terms of trade operations, quite frankly. And I'm still a little bit blind, but I'm beginning to open my eyes and see, hey, I think there is potential. But you guys deal with this on a day-to-day basis. So maybe, Shiyam, give us one or two examples. One example of where you see AI bringing in value added to trade processing in it.
So earlier example of document examination, there was a key consideration of how do you extract the data out of these documents, and how do you read these documents. So I think APAC, the key consideration is that how do you read that data effectively, efficiently, and move that along the banking systems. So that has been clearly AI's capability. And now we are looking at a richer data set. So we are now looking at moving that into compliance. We are looking at data processing. So that's a key differentiator from AI perspective.
I think that's a very good example, and definitely in terms of compliance, because historical sequencing of events is very difficult to map from physical paper. But if you can do that using AI, and now I'm convinced because I'm seeing what it's doing with my silly questions, okay? So maybe, Kevin, give me another example where you see the potential.
Absolutely. So very similar. So the fact that this AI technology can enhance. Nowadays, we would dot check. It take us 3 days to check 100 pieces of paper. It takes 1 hour. So if you think of it, and going back to Vidya's comment, if you can use that and leverage the AI capability, you can take the individual that traditionally would have done the manual checking of documents, and provide a upskill of the individual. We spoke about it earlier. The trade skill set across the world is reducing. We cannot afford as a financing practitioner to limit them completely. So you have to take that individual, transform them, upskill them, and use them in more value-added services. Where you can enhance the client experience and leverage the capability of AI. That's where we see real value. And we have the perfect opportunity as an African, and if I can double click on Africa for 1 second.
Please.
We can transition. We're in the unique position as Africa to leapfrog the rest of the world. And I say that boldly. But we have the opportunity, and we should do it.
I think that's a really good point, because in kind of the life cycle of AI, not that I'm an expert in how it has grown, it's been kind of a little bit flat. Now it's going up like this. So if you're coming in here, based on what already had been achieved, I really do think that for emerging markets in particular, there is a huge opportunity for development and to move forward. Just that we've mentioned the emerging markets, the trends themselves are interesting, that now in terms of trade volumes, developing countries are accounting for close to 50% of global trade. This is a big change. And this is where all the poverty is and the challenges are. So I believe, but I'm not yet convinced, that by using the technology quickly and appropriately, we can make trade more inclusive, right? And actually leverage the benefits that you have
Standardized.
Yes?
Standardized to a great extent as well. So because in markets, especially discrepancies, dot checks, for example, it's perception, right? How do I perceive this as a discrepancy? Now that process is getting standardized across the world.
Well, it has to get standardized, and I'll tell you why. I did a seminar recently for a major bank on checking documents, okay? And the audience was between 19 and 25. And at the end of the seminar, they said, Vin, it was absolutely amazing. Well, there's no way I go check it. Interesting, enjoyable, though not for me. So you're absolutely right.
I would like to add a little bit more point in terms of transition. So we are currently at a particular level of pilots being conducted and certain AI being applied on certain processes, but there are still a wider opportunity for us to actually apply the AI across all of the other processes. So currently, if you look at an operations shop, they would be looking at certain manual processes, certain processes powered by AI. So this transition for operations managers must be carefully managed, because you have a split process right now So sooner we get to AI, a complete AI model,
Okay.
that will be much more beneficial for operation use.
Okay, I'm not convinced about complete AI model, but again, you know a lot more about this than me. But Kevin, in terms of what Shiyam has just outlined, what are you actually seeing happening where the AI is being used on a more practical basis for processing trade?
Yeah, so just touching on that point. So I think if you look at our two continents, right? So you've got Asia, you've got Africa.
Yeah.
We could use that technology to work within different continents using the same platform to create an efficiency which traditionally would have taken 2 weeks of doc checking, putting documents in an envelope, sending them to a different continent. We could leverage that and effectively do it within seconds or minutes.
Yeah, well, Kevin,
By 2 different continents.
yeah, that sounds very nice to me. Okay, it's a lovely story. So you have a big bank in Africa, you have a big bank in Asia, and they can actually share all these data. That's really, really. But what about the rest of the world? Like, come on, that's not a global system.
No, and it's a valid point, but we got to start somewhere.
If we can leverage on the technology to actually reach out to our corporates to do certain start,
Yeah.
that would even be more beneficial, because we see a lot of movement of documents, physical documents between the officers, and then document corrections being done, moving back and forth. Those things can be actually eliminated through this same capability being applied in corporate's office as well as in tech.
You know, Sham, that is a very practical comment. Like, I've been around in trade for a long time, and I've seen lots of ICC rules unfold. But actually, sometimes we put the cart before the horse. But if we go back in time to the original UCP in 1933-82, the letters of credit were already working, okay? But not working really, really well. So we come up with standards which mirror the practice and fine-tuned it. So I think you're absolutely right, okay? What that mean, though, right now,
Is digitization its source?
a digitization, that's actually a very good way to put it, Srividya. So would that mean now you're kind of convincing me that lots of good work have been done, you said pilots, separate, but maybe in an isolationist manner. Maybe now we're at their tipping point for joining the docs that are going to bring real benefits to trade and keeping trade actually flowing. Kevin, what would your point be feeding on that?
No, absolutely. I think we are. I think we are at a turning point in trade finance. I think we've spoken about digitizing trade finance for the last 5-10 years,
Yeah.
more. But I do get the sense, and I can see it in our own organization, that the tipping point is coming. I think there's so much good work being done on digitizing e-bills of lading, digitizing documents from source. Technology's been around for a long time. I think it's up for the banks and their clients to step up now and say, now's the time to transition into that.
I shall.
Literally will.
I think so too. I think we have to move from a digital island kind of a concept.
Okay.
So there is a lot of work to be done. Yeah, I think we are moving in the right direction.
Okay.
I see positives in the industry, particularly in APAC. Different banks are talking to each other. So hopefully in the next 3 to 5 years, we should see a broader adoption of
Okay.
AI.
So you're seeing the momentum right now. And Srividya, are you seeing it?
Absolutely. And this, especially what, Kevin touched upon earlier, single review. I mean, how could you bring that efficiency across continents, across geographies? And of course, blockchain is not something we can work on. Can we get somewhere close to what it actually means? That single review is a critical element.
Okay, well then, I was going to do a long summary, but I think I can summarize very quickly. We are at a turning point, so just together we need to go around the corner. Let's do it, yeah? So thanks very much. Srividya, thanks for all.
Thank you, Vincent. Thank you for having us today.